Welcome everyone. My name is Wen. I'm the Business Development Manager for MAP, and I'm very pleased to welcome you all to today's masterclass with Laura McKenzie. Laura is the CEO and Director of Scale Investors, a very active network of 70 investors who have invested over $3 million in 6 startups. And Scale is also a female-focused investment network. So all the ladies in the audience, if you're ever looking for angel funding, Laura is the person to speak with. So without further ado, would you please welcome Laura McKenzie?
Thank you for coming, and I'm glad to see a few female faces in the audience because I was quite excited. My first slide has Ashton Kutcher on it, and I think you may appreciate him more than the men in the room. So I'm really here tonight to share with you a little bit around what angel networks are, why and how you might raise funds via angel networks, how angel networks are different to individual angels, and then how they are different to venture or crowdfunding, and then really how to evaluate angel investors, because it's a long-term relationship and you want to make sure you get that right. I think the average angel investment lasts about as long as the average marriage. And think about the time that we invest in all kinds of media and situations in a life partner. You should really be doing the same kind of research around your angel investors to a limit. And so I always thought, having met a few angel investors in Australia, that they were all men in their 60s wearing blue shirts and chinos. And I just want to introduce you to a few people who have been very influential in the angel scene globally. So some of you may know Ashton Kutcher from film or TV. He actually has a degree in biochemistry. He's very wealthy, like many angel investors. And he has invested in Airbnb, in Spotify, and a whole bunch of other pretty big deals. The lady next to him is a really successful technology entrepreneur, Jean Hammond. She won the Hans Severin Award last year in the US through the Angel Capital Investment Network, and really that's honouring someone who has had the most impact on the market as an angel investor. So she's very active. She's done an incredible amount of deals, but the one she told me she was most excited about was Zipcar, which was started by a very good friend of hers. Audrey Sherburn, you might have heard about him in the press recently. He's actually based in Sydney. He's probably one of the most active angel investors in Australia. He's an individual investor, but he's also part of angel networks. And in fact, you know, he had trouble getting a visa coming back into the country, and that's why he was in the press recently. And part of the community really got behind this campaign, almost like a Change.org campaign, I think it was, to get him back, because he really has been an incredible mentor and investor, both in time, in expertise and networks and finance in this space. Given the Queen's birthday honours list came out on Monday and my English heritage, I thought it would be remiss not to mention the UK here. So Jenny Tooth actually she runs the Angel Investor organisation in the UK. Angel investing in the UK is big, and I will go on to talk about that a little bit later. And we hope through policy changes and community development and some great exits from companies in Australia that we'll follow that path. And I think culturally we're probably a little bit more aligned to the UK than we are to the US in terms of what to emulate. And then who's been watching Shark Tank on a Sunday night? I'd love some audience participation. Thanks. It's good to see a friendly face in the audience, Joe. Thank you. So Steve Baxter, again, is one of the most active angel investors in Australia, runs River City Labs in Brisbane, has invested in a whole bunch of things. I mean, you've seen him on Shark Tank, but he's invested in lots of tech startups. I think he invested in an indoor skydiving business that listed on the ASX. He asks some great questions on Shark Tank, and I spoke to one of the sharks, Naomi Simpson, today, who is also a Scale angel. And she shared with me that we may just get 3 minutes of an hour and a half interview that they have with all of the entrepreneurs that pitch there. So that's quite a long time to be grilled about your business, and it's funny what they choose to show us on TV. I think it's what they think we want to watch. So the point of showing this is really angels come in all shapes and sizes, all genders, all ages, and invest for all different reasons. A lot of people become angel investors because they want to make a financial return, a high financial return. And it's part of their broader overall asset allocation strategy. So they might invest in some safer things like bonds or long-term deposits. They might invest in the stock market, which is more liquid. And then angel investing is a very illiquid asset class because it's very hard to sell that investment until the business is sold. If the business is going really well, you probably want to hang on to your shares. If the business is going really badly, it'll probably be really hard to get someone else to buy your shares at the price you're willing to accept. So just want to step back 100 years or so to really just share with you what an angel investor meant back then in New York, where it was really hard to get Broadway shows off the ground. And actually, you know, if you think of the layout of a theatre, people were called angels if they were able to finance a production so that, you know, they could fill the house. And so really, since those days, you know, that they were typically very high-risk investments. Those who take the chance on those high-risk investments are called angels. An angel is someone who makes a direct investment of personal funds into a venture. And what I mean by that, and I'm just trying to differentiate angel investing from investing in a fund or a fund investing in your business. If I'm an angel investor and I'm investing in Wen's business, it's my money. I'm not making the decision in terms of someone else. I'm not making the decision in terms of a superannuation fund. I've had to earn that money. I've had to pay tax on that money. And if I can afford to be an angel investor, I've probably paid tax at close to 50%. So I have to earn 100,000 to invest 50. And then the chances are, you know, 1 in 3, I'm not going to get any of my money back. 1 in 3, I may about just get my money back. And 1 in 3 times, I will get a 5 to 10 times return on average. And angel investors are pretty smart, so the average is a pretty high bar. So it's pretty painful. You've got to really be passionate about the business that you're investing in. You asked me to talk about really angel networks here. So there's lots of research out of the UK and the US about returns to angel investors individually and returns to angel investors in groups. And in both of those longitudinal studies, the statistics say that on average, people generate higher returns if they invest in as a group. And I guess if you're thinking about that, if you're at university and you're evaluating a problem and there's 10 of you in the room, you'll all come at it from different perspectives and you might reach a different conclusion than you would have done if you were investing on your own. So maybe you say no to more investments if you're investing in a group. Maybe you might invest outside of your core industry expertise if you're investing in a group, if there are others in the group that have that expertise. But what those studies also show is that there's a strong correlation between the amount of due diligence angels do and then the amount of regular reporting and mentoring and communication they have with the entrepreneurs when they invest. So people often call me and say, hi Grant, people often call me and say, you know, I want more than just money. I would really like mentoring. I've seen some of the people that are part of your network. I want to be introduced to X corporate or Y person. And angel investors like doing that. And by investing in your business, they're absolutely financially aligned with you in terms of outcome. And so most angel investors, it's not just a check, it's not dumb money. They've done a lot of research before they invest in your business. And then they really are looking for entrepreneurs who are willing to listen to feedback as well, you know, in the right structure, under the right kind of governance framework. And so, as I said, it's a little bit around finding your partner. You want to make sure that you're going to enjoy spending the next 5 to 7 years catching up with whichever angel investor has led that deal on a regular basis, probably at least once a month. And you want to feel comfortable calling them at midnight if things are going wrong. So it's really important when someone's doing due diligence on your business that you're also doing some diligence on them and how, trusting a relationship you're developing. So I just want to talk a few numbers. That's why I brought some slides. It's a big part of the market. A couple of years ago in the US, the amount invested by angels was almost as much as the amount invested by venture capital firms. And that's a similar story the world over. We're seeing a rising tide of crowdfunding too, and angel investors are fully aware of the risk that brings to their business model. Generally, if you're crowdfunding money, they're unlikely to come with mentoring and networks and more hands-on investors. So if you want dumb money, it's the place to go. But also, if you want to top up your round, it's the place to go. And some people are really interested in investing in startups, but maybe don't have the time or the inclination to be really hands-on. And so it's quite normal now for an angel round to be accompanied by a crowdfunding round. And you've probably heard of Venture Crowd here, which is doing that just with sophisticated investors. I just wanted to put in a quote here from a guy called John Houston, who's run the Ohio Angels. There's about 400 of them in the US, and we caught up with him in April, and he's been over here a few times. One thing that you really have to bear in mind is when someone invests in your business, there's a huge asymmetry of information. You know lots about yourself, you know lots about your business, you live and dream that passion. We know nothing about you. We know very little about your business. We will do reference checks and all kinds of things like that. And, for 3 or 4 weeks, we do a lot of due diligence, but it's really a fraction of that. And so it's an extremely high risk investment. And people have to be prepared for it to go wrong. And so, John always says, well, until an exit, we're all donors. And I think that's probably a good way of capturing it. And you would treat your donors with respect, so you'd do the same with your angel investors. In the UK, again, a growing pool of angel investors. I'm sure there's probably more than that now. And similar quantum, a third to a half of all angel investment recorded, bearing in mind that probably the majority of it is private. As venture investment. And I just wanted to share with you some findings from a survey that was undertaken last year. So in the US, in 2004, 8% of angel investors were women. And this is just me giving my particular bent. Now that number's about 23%. And in that time in the US, there's been many more female entrepreneurs who've gotten funded. In the UK, that number's increased from 7% to 14% over the last 6 or 7 years. And nearly half of angel investors are young. I love the fact that young seems to get older and older as I get older and older, so I'm pretty happy about that. And the other thing is there's a rule in Silicon Valley that people used to go by that they wouldn't invest in someone that they couldn't cycle to. In Asia, I was in Hong Kong last year, and someone said they have a 3-hour rule. If they can't get to the entrepreneur in 3 hours, they wouldn't invest. But I think that's changing. Increasingly at scale, we are doing global collaborations with angel investors around the world. And people are much more comfortable investing outside of that very small geographic area. So that opens up many more opportunities. It also means as an entrepreneur that you're competing in a global marketplace for angels' attention and wallet share. I talked a little bit around the crowdfunding platforms. We're all very comfortable investing alongside that. And interestingly, in the UK, there are some great tax benefits of investing in startup businesses. You can get up to 80% back the year that you invest. And so it's no surprise that market is much more active than it is here, and we're lobbying for some policy change. We'll keep you informed as and when that happens. The other interesting trend is 25% of angels are investing because they want to create social impact. And so I think we're seeing a growing number of businesses that are trying to generate a social return, that are being successful in raising money. One of our angel investors put some money into change.org, actually alongside Ashton Kutcher. There's the link. Who knows where that business model is going to lead, what the exit opportunities could be. But they've achieved some great social outcomes through their campaigning. The other interesting thing is angels expect pretty high returns. So almost half think their investments are going to generate a 10 times or more return. Now, the Founders Institute says that any entrepreneur is realistically optimistic. I'm not sure that that's particularly realistic, but it's certainly something that we want to feel comfortable with. Any new investment that we make, we want to believe that that investment has the capability of generating a 5 to 10 times return for us. Other angels will have a slightly different profile, and there's an article that came out yesterday that I just want to share with you about researching that. So I talked about the risks of angel investing. So it's really important that angel investors have to be willing and able for their life to not change dramatically if they lose all their money. And so for that reason, there are some rules around who can be an angel investor and what is called a sophisticated investor. Based on money, not necessarily educational or investing expertise. And so that's gross assets of $2.5 million or, steadily earning more than $250,000 a year in income. Pollenizer did a study 3 years ago which said there were only 500 angel investors in Australia and 2% of those were women. So I could tell you who those 10 women were on my two hands. I think that's changed quite dramatically, and I think that is a huge underestimation of the people that are doing angel investing in this country. Not everyone wants to be in the press. Not everyone is part of a formal angel group. There's lots more going on. This is really just the tip of the iceberg. We don't have our hands across the statistics. We don't necessarily have the resources here to do that research that they've done in the UK and the US. But 4 or 5 years ago, there was about $50 million that was coming in through angel networks. I think that number is much higher today. Scale's a very new angel network. We've invested $3 million in just over a year. I would hasten to guess that number's probably nearer 200 today. And I just have given you some names of formal angel groups. There are many more that are informal groups of 2, 5, 10 people. But Melbourne Angels is also active here in Victoria. There's a big group of Sydney Angels. In Queensland, you've got the Brisbane Angels and the Gold Coast Angels. The West Australian Angels are pretty active. And the other thing is that the whole model of venture capital seems to be changing in this industry. There's a lot of individual angels who, like Mike Cannon-Brooks, who's an investor in Blackbird. So he's a successful entrepreneur, individual investor, but also investing in the fund. And that model is consistent across Blackbird, it's consistent across One Ventures, and Scale's launching a fund next year, and we anticipate there'll be a number of our angel investors who both invest individually and through the fund. And I think that model has also been employed in the UK, less so in the US. This was the article that I read today, and I've got a copy of it here. I love Medium. It tells you how long it's going to take to read. So if you've got 15 minutes, this is about a lady who is researching who to pitch her business to. And it's quite an interesting journey of, she's really researched who are the industry experts, who invest in businesses like me in the geography that I'm in, and I'm a woman, and that's going to be harder. And so then how am I going to approach female-focused angel groups, because I want to have a woman on the board. But it's a good way of structuring research, so I'm very happy to share the link to that article afterwards. I just wanted to touch a little bit on Scale, and then I'm sure you've got some questions. So we're a female-focused angel group, and what I mean by that is the majority of our members are women. We have 72 members, including 12 Scale males, don't want to miss out on the opportunity. And they want to see a different kind of deal flow. They might be members of other groups. You may not be able to make that out from there, but you might see some familiar faces. There's a number of women who are well known in the Australian market. So I mentioned Naomi Simpson, Carol Schwartz is one of our founders and an angel investor, Diana Williams, who founded Fernwood Fitness 25 years ago. There are a number of other very accomplished women, Rebecca McGrath, who's the ex-CFO of BP, Margaret Jackson, who's been on the board of BHP and on Qantas, Lindsay Cadamol, who was an entrepreneur and sold her business to Telstra about a decade ago, Judith Smith, who's really been kind of the pioneer of the private equity investment through the super funds here. So there's some great women and men involved, really wanting to get involved in this space in Melbourne. Just in terms of getting to know who you're pitching to, it's worth doing some research around if they've invested in startups before, who they've invested with, what type of personality they are, what's their functional expertise. If you really need marketing help, it's great to have someone with a bit of a background in that space. We've got a number of people who are non-exec directors on listed boards. We've got a number of high net worth individuals from family offices. We've got quite a few entrepreneurs who, when they started their business 10 years ago, there wasn't much of an angel community here. We've got some experienced investors who've really joined for that diversity of opinion. And then we've got quite a few men and women who are partners at professional service firms who are really conflicted from investing in the ASX because the chances are that company is a client of the firm. So all different types of people, which means all different ways that we can help your business. And you're very welcome to ask us to help your business at the right time for you. And we've invested in 6 businesses to date in all kinds of industries. A hardware product in the water and sanitation space that's being used by the World Health Organization and UNICEF in Nepal. So a platform as a service play for people that have large portfolios of buildings that's being used by Microsoft and Lendlease and a few banks. A company called Trademark Vision that's really revolutionizing how you find, protect find, register and protect your trademarks. They've all been very text-based, these systems before, but its logos are very visual. We've got a business that's got some very cool compression technology that's being used by communication companies in emerging markets. We've got a business that's a talent platform or talent marketplace for essentially online marketers. So a lot of you follow us on Twitter. They get involved with that. They do a newsletter for me. And so they're scaling up out of the US. And we've recently invested in a drug discovery platform that believe they have the cure for Alzheimer's. Bold statement, very high risk. But I think that gives you the idea that angels want to build a diversified portfolio. There are some angels that only invest in what they know and where they've had businesses. And you probably want someone like that on your board. And then you probably also want someone who's got a broader view. I think I'll just leave it on that slide, which is really, if you're thinking of applying to scale, got to do a bit of a sales pitch. These are the kind of things that we look for in the businesses that come to us.
Everyone, would you please join me in thanking Laura McKenzie.